Hi, real estate agents. I want to take a little bit of time and explain what a bridge loan is, especially if your clients are interested in buying a home before selling their existing home. So in this video, I'm going to talk about what is a bridge loan, how it can benefit your clients, and what are the pros and cons of it. So let's start with the definition. A bridge loan allows your clients to bridge the gap between their existing home and their new home without having to sell their existing home to buy and qualify for their next home. Well, why would a person want to do that? Well, number one, there might be a homeowner that has years of living in their existing home and they have a lot of clutter, a lot of items in their home, and you find that it would be better if they thin out their house first to get their home ready for market. And they might just want the time to be able to do that without having the pressure of having to sell quickly and buy quickly. So that provides some room for them to be able to do that. The number two reason is as you know, many homes have to be contingent. If they're not doing a bridge loan and they can't qualify without selling and buy their next home, then their offer has to be contingent on them selling. And in a market that's competitive still, even though we're coming more to an even marketplace, you might have another buyer that's interested in buying that home, that next house, that does not have to put an offer contingent. And so what you're asking, as you know, is you're asking the sellers to wait till your client gets their home on the market, till they get an offer accepted, till they close on their existing home before they can close on their new home. So offering a bridge loan takes that completely out of the mix. Pretty cool, right? So let's talk through what a bridge loan is and the pros and cons of it. So a bridge loan offers your client the ability to put an offer in on a house without having to sell their existing home. What they need to have is lots of equity, at least 30% equity, I'm finding 30% or more, and the ability to qualify for their next house. That's it. They don't have to qualify for 2 house payments because typically a good bridge loan company will not have them make 2 house payments. They will not have to make their existing house payment and their new house payment. One will be taken out of the mix. And so that's a really nice feature that you'll want to make sure that the bridge loan company offers. Mortgage One, that's something that we offer. So a bridge loan is virtually a short-term loan that gives your client 6 months to market and sell their home. Qualifying is easy. Typically, your client has to have lots of equity and then be able to qualify for their next home. So when you hear a lender say, oh no, your buyer doesn't qualify for that bridge loan, then have them call me because that's probably not the case. Probably the case is they don't offer bridge loans, is the truth of the matter. So they don't have to qualify with 2 house payments because I just said that one of the payments will be completely eliminated as they work to sell their home. So let's go through the cons of a bridge loan. There are extra closing costs. They're going to have bridge loan closing costs and then closing costs to buy their home. Some bridge loan companies force your client to have a refinance after they pay off the bridge loan. That is not the case with Mortgage One offerings. We do not have to have a refinance. So what happens is the closing of the existing home happens and the rest of their equity can then be pocketed, could use to pay down their new house, and if they do that, they can recast their loan without having to refinance. And they just don't have a second bridge loan to pay off because they pay off the bridge loan with the closing of their mortgage. They have to have a plan of action to sell their home. A bridge loan is not open-ended. Typically, it gives 6 months, at the very most 12 months to sell a home. So once the bridge loan closes, within a couple weeks, they should have a plan of action to put their home on the market because they have a total of about 6 months to sell their home. And if they don't sell their home, they're going to have to discount their home to a probable buyer so that they get a buyer, or they're going to have an offering from the bridge loan company to purchase their home for them. So summary on the cons: there are closing costs. They don't have to qualify to buy. However, they have to have a plan of action to sell and sell quickly after they close on the bridge loan. Ultimately, if they don't sell their home within, say, 6 months, they're going to be forced to make a hard decision, either having the bridge loan company purchase it or selling their home to a probable buyer for a discount. Well, that about sums it up. If a bridge loan might be something that you want your client to look into, have them contact me. I'll go through the options with them. We'll look at an equity line of credit that has very little or no closing costs versus a bridge loan. We'll look at not having to do any bridge loan because they qualify with both house payments and they have money to access for their down payment requirement on their new house. Those are some of the options that we'll look at. But the whole thing, the most important thing is to have a lender that will take a holistic view of your sellers and buyers options so that they can see clearly what they have available to them. And so to have that, you absolutely need a lender that actually does bridge loans, and that's me, Dawn Connors at Mortgage One, providing you fantastic mortgage solutions and hoping to work with your next client that might be seeking a bridge loan. Thank you for watching.